points on the list. Live in the hill, still gon' spread. Still reinvesting. Fear how I feel, then you feel it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but the sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, ladies and gentlemen, I got your watch list coming in February 3rd, 2021, and the stock market is back to normal if you look at the last couple days. But I also have 3 stocks, or actually 5, that I'm going to be looking at coming into tomorrow after all of these amazing earnings. But you saw what happened today. This is bringing us right back to the middle of where that GameStop short squeeze drama started. You saw amazing reports out of Google and Amazon. I'm sure a lot of you heard the news. Jeff Bezos is stepping down as CEO. Nonetheless, a lot of the stocks went up after hours. Even today, you saw the most shorted stocks actually decline, and then everybody got into the crowded trades, stuff that they already had. Amazon, Google, Apple, Facebook, Uber, Snapchat, Palantir. Wait, no. But today was a very wild day. It is going to set us up for the rest of the week, but it is also going to give us more stuff to look ahead for in the future, so I hope you're ready. But I got the plays for you. I made a couple plays today that we're going to go over, and I want to look at a bunch of stocks for the earning run-ups tomorrow, and then everything else for the rest of the week and what happened today. So let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free 99. It costs you nothing to join. youtube.com/the-stock-market. You can post the plays, see the plays, watch the watch list come to life, and yes, if you want to hear all of the old school jams while getting the fastest stock news and watching the snap squeeze continue, then yeah, we're the place to be. And the most important thing you need to do, post your watch list below. Let us know what you're looking at. Got any plays, comments, remixes, anything, post them below and source that info. Shout out to Chad, baby. So right off the bat, earnings has delivered. We got the big Amazon Google reports, and given what we saw the last few days, I'm expecting some continuation. I mean, even if we come back here to the chart, we've been talking about this a lot, and this key level is very, very important. Again, when all of that drama started, but you could see it was a little bit of a remix of what we saw the last few days when we had the earnings out of Apple and all that. So the Apple and Facebook earnings were bad. Now that we got Google and Amazon to balance it out, I'm expecting a move upwards, or at the very least, I'm expecting to see the market actually respond. So this is the first major key, because I'm expecting a lot of movement to happen tomorrow, even some quick moves in the beginning. It might level out, but now this is a big milestone for the market. You are going to get some bigger companies this week. We still have a pretty big earnings list coming up, but I'm expecting the market to move a little bit now in either direction. And now this is going to tie into the econ, because we still have that jobs report coming up. So I talked about how this jobs report was important considering the last bad jobs report we had. So if this jobs report is bad, it is probably not going to be good. But now that we've got this earnings, I think this might be an event, or I wouldn't be surprised to see another event come to light and have this be the new focus of the market for a little bit. So depending on what happens in this next few days now, again, you saw how the market got distracted with the GameStop stuff. We did start off with the inauguration and the politics at the beginning of the year. Now you have the earnings. Apple and Facebook was distracted by the short squeeze. So now that we have this, and now you're seeing some of those stocks die down, the question is, what is going to be the next thing the market is going to be focusing on? And that is what I want to watch for moving forward. And I think now we have that catalyst given some of these earnings reported, and now the smaller companies or the less hype ones or less big market caps are going to start reporting. That being said, now I do want to tie that in a little bit. Watch the currencies. Like I've been saying, here's the Chinese currency. We've been talking a little bit about bonds and the dollar, but now this is one thing I want to see here, because we have been seeing some pretty big movements or stalling out on all levels. It's as if the whole world is kind of watching and waiting to respond to the next thing as well too. So this is something I'm going to be looking at, but I'm expecting broader news to kind of take more weight here moving forward. But as far as the earnings for tomorrow, you're going to get Spotify, Abivi, Biogen, Sony, Humana, and Boston Scientific in the morning. You will not be able to play those. We had that Spotify play that went up, but then after hours, you're going to get PayPal, Qualcomm, APPS, eBay, Align, Grub, YumC, and Allegiant. Again, I always say there's a lot more companies. Post them below if we missed any. Nonetheless, though, what you saw today, a lot of these earnings run-ups have happened. You didn't see it as much last week. You kind of saw how the market was distracted, but this week and even today, you saw a lot more of those earnings run-ups. So you got to be careful with those. So that is going to be for Wednesday. As far as Thursday in the morning, you're going to get Nokia, PLX, PM, MRK, BMY, YUM, RL, CMI, CI, HSY, and SNA. These are just the ones in the mornings. After hours, you will be getting Snapchat and all those on Thursday. We will talk about that on the watch list tomorrow coming into them, and those are some plays to watch. So our work is cut out for us and the earnings moves are happening, but what happens with the continuation tomorrow after Amazon and Google, that will be able to tell us a lot because we've only still seen about 2 big earnings beat this whole earnings season. So I hope you're ready, but that is pretty much it. So let us get into the plays. So right off the bat, I have a few different plays that we made today. One that I really liked. We talked about this. I made plays earlier on it this week, or last week, so you could kind of consider it an average down, but I like where the contract prices are at, and it has a few pieces of earnings in its favor, and that trade is going to be Walgreens. I'm seeing it as a swing trade. I'm expecting time. Hopefully, if I could even make this batch that I got today free, that would be ideal, but I like it because it's going to have its ex-dividend run-up. I believe the ex-dividend is going to be on the 18th, so I'm expecting it to kind of get a run-up in between, but at the same time now we have that new CEO earnings from last week, so I really do like that. So that is going to be the first play. As far as the actual trade, I grabbed 10 of the Walgreens April 21st 60 calls. I think I only went as far as March last time, but I got them for 70 cents, spent about $700. Again, if they do go up, I can make them free, get 100%, sell 5 back. That would be ideal, but you could even check the premium on these contracts. They were pretty much at the low, so it does depend on what Walgreens does, and if you have been watching Walgreens, it has dropped off a little bit from that run up. Again, they were up a lot and they are a slow mover, so this is a pretty interesting play. I usually never play the options on Walgreens, so again, this is reacting mainly to the news, but now with that ex-dividend run up, I think it should be decent. If it goes the other way, I would be surprised, but we'll see. We did get surprised on that Kraft play today, so that's going to be the first one. The second play I like is Pinterest, and this is going to tie into the rest of the plays because it has to do with what companies had earnings run-ups or not. So I like Pinterest. It had a run up today. I mean, they closed up 7%, but I don't own any, so it's a lot easier to play for me. So pretty much I want to see if that earnings run up continues tomorrow, and you kind of see a lot of the movements. Unfortunately, you haven't been seeing big intraday moves even with Amazon and all of them. Some stocks would go up a lot, but you've been seeing all of it happen pre and post market. So even Snapchat today, that was a good earnings run up. Even Uber, but they both gapped up and then pretty much moved only 1% intraday, even though they all closed up around 3 to 7%, which was pretty big. So I like Pinterest, but like I'm saying here, I already own Snapchat. I had exposure. It was harder to play those. The fact that I don't have any Pinterest, I could probably justify it a little bit better. Nonetheless, though, it's probably going to have a premium, but that is the second play I'm going to be watching. As far as the third play, Mr. AREC, AREC. So we talked about this yesterday. I was just surprised it didn't move, and then today it caught some steam, but I like how it held up relatively speaking because I said yesterday, well, those silver stocks, a lot of the metal stocks or commodities, they went up and AREC didn't, but today AREC shot up while a lot of those stocks gave back those one-day gains that they had. So I really like that. That being said, now I'm pretty much, I remember I think last time I wanted 50%, I didn't take it. I'm actually going to be looking for 100%. So I still have those 400 shares or whatever. We bought those not too long ago. You guys remember it here. Again, I'm up 47%, so I'm close. I could probably sell 200 shares and make it free, but again, my initial position on this was tiny. 400 shares may sound like a lot, but this is $800. Again, tie that into the overall strategy. You could even see bringing it into other stocks. We talked about it today on live. A lot of these shares are free, and we've used this strategy of playing small. So sometimes it's because we like the trades, but then other times too, it is kind of playing momentum in certain industries, and Vaxart is a great example of that. And we're holding these shares for free, but we did the same thing making it free a while ago. So that is one of the key strategies, but I'm going to be watching AREC, aiming for 100% now. The next play I'm going to be looking at is Disney. Had a great run up today. They really killed it. If you had deep in the money calls that you bought for $1 million, you would be loving it right now. So I like it. You guys remember we had those Aprils. We sold out of them. I would love to go check the prices of those contracts, but all in all though, I'm going to be looking for the double dip because I believe they're going to report next week. I think you got a little bit more time, so if they do come down or kind of stall out, which I wouldn't be surprised, then we might be able to take advantage of it. But don't forget, sometimes when it makes a big earnings run up into it, that might price in the whole earning. We've seen that a lot this season. Again, you've only seen 2 companies surprise. So even on that note, I'm going to skip to Uber and Snapchat Snapchat because Snapchat's one of those companies. It is ripping up after hours. It is at all-time highs coming into its earnings on Thursday. I want to watch it, but it is already in full run-up mode. And what I mean by it could kind of move up what it's pricing in. Snapchat's already been up about like 5-6% already. So if it was pricing 5-6% and then the 2 days before earnings, it moves more than that, it's kind of already pricing that in on one of the directions regardless of what happens. Because even if it drops and goes down 5%, then you go right back to where you started pre-earnings. So it really does balance out. So I'm going to be watching those again. Uber and Snap, they went crazy. I'm going to keep my eye on them. But again, we already have exposure with them. So that's why I'm saying I like Pinterest because I don't have any exposure. You know, I was looking at Snapchat this morning. We talked about it. We have almost 300 shares here. We have a bunch of these Snap Leaps that we bought last time, almost $10,000 worth. Again, these options are free too. Same exact strategy we've been talking about. Buy for 10,000, sell for 10,000, keep the rest for free, but then they're able to appreciate. So I already have exposure on them. Again, same thing even with Uber, and we have both of those companies in the long-term account. So that's why if I wanted to gamble on them intraday, it doesn't really hold the same weight, but that's why I kind of like Pinterest, but not going to force it. Then finally, Qualcomm. It's already had a small run-up, but it's a slower mover. It's only moved like 2% today. Again, we ghetto spreaded those other contracts, and you can kind of see what I'm talking about here because look at what happened. We actually made money on the ones we ghetto spreaded in those April calls. They pretty much stayed the same price. These were up 100% not too long ago. They came down after a little bit of that GameStop volatility, and then they haven't really came up above that. So if we do get bullishness tomorrow, you start to see pre-earnings run up. I think this one might be one of the best ones to grab, but again, it all depends on how the market reacts to all the earnings tomorrow. So those are going to be the main plays I'm watching. As far as everything else, watch Amazon. Again, Jeff Bezos left. The earnings report was crazy. They beat on every single front. There was some issues, I believe, with the margin and some of the growth with AWS, but everything else, they smashed it. And the new CEO is the guy who is heading up the AWS department. So he has a pretty interesting background. And again, AWS has been a highlight of Amazon in general. So I want to see how it reacts, but they moved firmly beneath any expectation. So we were looking at some of those iron condors and all that. So that's going to be key. But again, take a look at what I'm saying here. You know, although it was a good report, you know, why did they only move 2%? They were at $3,200 before they reported. I believe they were at like what? 3,388. So they almost moved 10% coming into the earnings. And now that comes into Google. And both of these, I think, could be potential good plays. You take a look at Google the last few days. Well, they almost moved 10% as well, too. And now they had a 10% earnings report, but they went up another 10%. So I wouldn't be surprised to see this come down a little bit, but I am going to get squashed on those leap puts. They have a lot of time, so we'll see. And then that way you guys can see too what happens to a leap put with more than a year of time. Company shoots up 10%. I mean, how is that going to look on the account? I mean, we will find out tomorrow. Nonetheless, though, I think both Amazon and Google are going to be key to watch. Watch them. Watch Vaxar. I was trying to look at some of the other ones like DVAX and I&O like we brought up yesterday, but they moved up a lot. I really, really like it. They're at a breakout point. I might sell covered calls, but given it's a biotech, I might just wait. We've already made those shares free, but I thought that was interesting. And watch for even a rotation. Try to identify some of the winners and losers of any of these virus vaccine trades. So watch them. Watch Intel. We sold out of this today, and if you guys remember, we did that naked straddle play. So we went over it today. You guys remember we got like $750 from this short straddle. I was pretty much forced to buy 200 shares of Intel at $61. We got a sign, so I was holding them, but today Intel bounced a little bit, and then that's what led me to kind of look at the numbers. We explained it live on stream. I was able to close out above that break-even price that I was at, and I was actually able to walk away with $200 profit. So we collected $750 premium. All of them expired. It turned into stock because we got assigned on the put side, but then the stock ended up going up because I held it, and I was able to close out and walk away with a net profit of about $200 because of the premium that we collected. So watch Intel. That was a play we made, and that even leads to another play I want to watch. I don't know if it's up here. KHC. We grabbed this today. They had news, and this one would really, really surprise me. I went big. I thought I was going to day trade it because I was kind of sketched out about the news source. Then it got confirmed, but overall, I just got pump fake completely. I grabbed 10 of the April KHC $40 calls for 28 cents, but I bought it because they got news that Hormel wanted to buy them out, or I believe just the Planters division. But the surprising part about all of that was that Hormel ended up being the winner. So usually somebody selling something or getting acquired in any way, any of that rumor, usually the buyer goes up. but in this case, it was reversed, and that does tend to happen. So I'm going to be watching that play, watch Disney like we said, and then KHC. Walgreens, I like for a swing trade. That's going to be fun. Pinterest, AREC, like we said. And then overall, just keeping eye on any of these momentum stocks that we saw today. Again, Uber closed up 7. They acquired a liquor delivery or alcohol delivery company. I thought that was interesting. But then DraftKings, Kathy Woods got some of this in ARC, so that went up a lot, and they're at a key level. I would even want to put DraftKings on like a tentative list just because above $60, this thing could get fun again, and we're still holding all those long term, so that's fun. And then finally, the UUP trade is working. I showed you guys the Chinese currency. I would watch the rest of the global currencies. It's like we are waiting for something. I mean, there's so many different factors going on here, but what you saw today, you saw a gap down on TLT. That means rates are about to creep up again, but now this time the dollar went up and the dollar held, and if you compare this to the last few days, you were not seeing that too much during earnings. Again, we've kind of moved a little bit, stalled, but if we start to break out of a 3-4 day trend and then it is now accompanied by TLT going in the opposite direction, that is not going to be good. But this is also pointing us to say what would be causing this, and there could be something else, and that could be the source of the news that we need to find. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to dig down before you build up, baby. But the Cole loves you. I love you. We'll see you in the morning. Let's go.